Hey everyone, welcome back to another Market Open live stream. I need to get dressed up early today. Anyway, let's go ahead and take a peek at what the heck's going on in the market because we've got some things turning a little bit red today. Certainly doesn't help that crypto's still sort of dragging along the bottom. Got some drama with Coinbase we'll talk about. Got lots of things going on. But let's take a peek here and see what we got. So first things first, we've got futures all down fractionally, right around 0.1% or slightly below. We've got bonds, 10-year treasury yield, for example, sitting at 1.35, potentially elevated from the 1.2, the high 1.2s where we were, because of shorts potentially covering on treasury yields. Probably worth a deeper discussion on that. But yeah, let's take a look at Webull and see exactly what's going on here and then cover some news. Here, for example, first is Bitcoin. Taking a look at the overnight hours here, you kind of see that Bitcoin ended up dropping down to a low of 444 again. And if you're sleeping during these times and you ever want to get, some of these lower prices, best thing probably to do would be set a limit order. Usually on Webull, for example, they tend to expire at 5:30 p.m. each day. But every platform is different, so it's something to look into. So this was actually the morning dip. This right here was the lower dip. You can see those were pretty close. We broke out of this channel finally, dropped a little bit down here, have since bobbed back in. But anyway, a lot of this sideways trading after these large liquidation events over here, which of course we talked a lot about in my video last night. So if you haven't seen that yet, why crypto is falling, worth watching that. Right now, we are starting the morning. Oh no, look at that. Starting the morning with actually Hippo down a little bit, 4.3%. My opinion, this is a $6 to $8 stock. So a little bit of a pullback there this morning after a 15% surge yesterday. That's not a surprise to see a little bit of a pullback after a run. Then we have, jumping up to the upside, and we'll kind of bounce around here. What we got? Look at this. Support.com's coming back with some potential momentum here. Go to the day chart. Support.com has really done the typical run up, run down play. But what we've noticed in sort of the momentum stocks of the day is it's not uncommon to see them come back for a day at a time, pre-market. Right now, it looks like we have a little bit of a pre-market surge here. Let's see how much money went into this to create this. We had less than 1,000 shares trading in the early pre-market hours. Looks like all of a sudden we went up to about 83 to up to 200,000 shares at a time here trading. So somebody came in with some buying pressure. And if I go 200,000 shares times 21 bucks, puts us around $4.2 million of share activity per minute at really the peak here. That's at the peak. So we're really trading $2 to $4 million here. Very, very low activity here in the pre-market. Yet being up 8% on low activity might create some form of excitement for it, though I wouldn't be too optimistic that this 8% will hold going into the morning. We'll see. Upstart. Here's one that does just keep rocketing. It's unreal. It's just day after day on this one. Yesterday, there was a CNBC Pro article about an analyst saying, oh, even though it's gone up so much this year, it's still undervalued. Now, that's awesome. I wish I could have that sort of belief, but I can't. I think it's way too overpriced. But I mean, you cannot argue this chart. I mean, this has just been a beautiful chart. It surged after earnings here in March, and since then it did a little bit of the trader moves where it went down, kind of channeled for a bit over here, went up down a few times. But this breakout over here is very, very nice. And look at the volume too. Look how beautiful this volume set is over here. So much more volume than what we've previously had. Here's your initial surge after that March earnings, summer sort of flatness, and just an explosion here in volume coming in. We've got Nano Dimension up 3.62%. Marcus Corp, WM, Dave & Buster's. Dave & Buster's coming up a little bit here. Yesterday we had a little bit of an early morning recovery sell-off, which then went away as the day went on. Let's see here. Kraft Heinz increases prices on 2/3 of U.S. portfolio. I wonder if they just reported earnings. Let's see. I don't necessarily see any kind of major price activity on Kraft Heinz here, but I did just get that heads up. Yeah, we were reading this about Campbell's soup yesterday, just jumping pretty strongly. Anyway, in terms of pricing, but also and not just all of the their desire for higher pricing, but just input costs. We were talking about the cans getting more expensive, the ingredients getting more expensive, labor getting more expensive, and that for every maybe $10 of price or cost increases, they're only able to raise prices about $5. So somewhat interesting to see that companies really sharing in the response to inflation. Tesla up about 1.17% here. Been on a nice trend here with Tesla. Affirm, we've got earnings on Affirm tomorrow, up 1.3% right now at 92.7. Tesla sitting at 1.1 or 761. You do have, let's see here. Let's go back to the downside here. Going back to the downside, you do have Hippo recovering a little bit here, back down just to 331, now below Coinbase. Bumble, yesterday they had issued shares, so I wonder if we still have lingering effects here. I wonder this activity here, large volume here, all of a sudden has somewhere around like 1.3 million shares here. That's somewhere around $8 million worth, but these are on the day charts. This is just interesting to see these day chart movements down here. But the volume that we had the day before yesterday, which was Friday, was 17 million. Day before that, 2 million. And then Tuesday was 33 million. That's crazy. All right, going to the minute chart here. Yeah, super, super quiet pre-market here. So it's really difficult, in my opinion, to look at this pre-market and actually suggest that something's going to happen. Because look at this. In this particular minute over here, 9 shares traded. 9 shares. That's nuts. I feel like if one of us, or if all of us watching right now just bought 1 share, that's 4,000 shares or whatever, we would probably jump this stock. I don't know. My guess is somewhere around 4% or something like that, because it's pre-market. There's so little sell liquidity in this pre-market. Just a guess. Let's look at the order book. So if we bought 4,000 shares right now, we would go up to about, we'd have to go, based on this order book, we'd have to go to 625. Yeah, we'd go to 625. So right now it's at, what is it here in pre-market? In pre-market, it's at 590. So 625 divided by 590, 5.9% is what we would move if if we all instantly bought an extra 4K shares. It's kind of interesting to see, but it shows you how quickly you could change or impact the stock price in pre-market. Pre-market is very, very little liquidity. This is why I generally don't like pre or post market. You'd be going, what would that cost? 4,000 shares would cost you, well, you'd be going up to about an average of like 615. It costs 24 grand. 24 grand, you could turn the stock green in pre-market. That's what I'm saying. Like, you got to be sometimes careful with this pre-market trading. And I feel the same way about support. But the funny thing is, sometimes you get these runs in the morning, and then you get this expectation. Oh, this is going to be the one that runs. Now, I will say there's much more volume over here. Here at support, sort of fallen a little bit. You got, over here you had somewhere around 33 to 50,000 shares, 12, 10, 20,000. 20,000 over here is still $420,000, substantially larger than what you're trading on some of the other ones pre-market. So worth keeping an eye on. Nano Dimension. This is one that makes me interested because take a look at this. here's your momentum stock of Nano Dimension. This insane run up here was really an opportunity for the CEO of this company who wants Nano Dimension to be acquired at some point in the future to just dump as many shares as possible over and over and over again. It was kind of hilarious. And what I mean by that is they raised capital every time this thing ran. And it was so smart because when that momentum wore away, they haven't really been raising money, but now they can actually operate as a company. Nobody's upset because the stock kept going up during that time. It just happened to bleed out since then, unfortunately. But who knows? Nano Dimension could be one of those where you actually get some return momentum. All right, then we've got Canadian Solar. Just this one's just like baby inching up. It's kind of like Tesla right now, just baby inching up. End phase back to 170. Really was hoping for this thing to just keep falling. Love a little bit more of a deal here. We've got, let's see, DraftKings, DocuSign, Shopify, Plug, Apple, SoFi. Okay, I mean, nominal movements right here in the middle. Nom movements by these. Now let's see anything particularly fascinating with the middle range here. I do though think it's interesting that Neo's back under $40. You've got DD sitting at 952. DD's been an interesting one. I mean, just look at the roller coaster of DD. IPOs runs up to $18 day one, falls to $7.16, runs just to fall again down to $7.44, actually a low of $7.18 during that day, and now back to almost $10. What an incredible little surge and crash and surge and crash here. A lot of folks, though, buying Chinese stocks right now thinking that that's it. This is the bottom. This is the opportunity to get a big discount price. It's interesting. Neo didn't offer. Okay, yeah, that's interesting. It doesn't surprise me that they need money, honestly, if that's the case. Let's go ahead and look at that. Neo offering. And I may as well pull up Bloomberg. Yeah. Yeah, it's interesting to me that Neo is raising money because they kind of need it. So maybe it's not interesting. Maybe it's kind of expected. But manufacturing is very, very expensive, and this chip shortage has a lot of the automakers really trying to run to get as much supply as possible, and more cash helps you do that. So it's not necessarily a bad thing. But unfortunately, anytime you get an offering, you get dilution of the stock. So Neo plans $2 billion offering. Take a look here. The Streets got this report. Let's take a look. All right. So Neo said Tuesday will offer $2 billion for shares at an at-the-market offering. And shares of Neo fell slightly. Okay, big deal. It's interesting that they did choose to do an offering at $40. Makes me wonder if they think running to 45 again or 50 again is a little bit more challenging, or if they just wanted the money now. They don't necessarily have to be stock traders, right? Yeah, no, there's no surprise that the chip shortage is going to last until 2023. That's one of the reasons you have automakers trying to stock up. Essentially, you've got almost every company at this point that's involved in the chip space is just saying, send me as many chips as you possibly have, and trying to just order more than they need just so they can survive longer. It makes sense. But actually getting your order fulfilled, that's the other question, or the other issue. So just not that many chips. AMC sitting at 47, slightly red today. We've got Hydro Farm sitting a little bit to the downside here, 559 on Hydro Farm. EXPI down 2.2%. Tattoo Chat. Hut 8 Mining down a little bit, 1.39 on this crypto movement here. Hey, look at that. Hippo's back to $6. Shift Technology at $8 even. Root sitting at 590. Lemonade sitting at 76.55. A little bit of a quiet market in terms of seeing big runs, with the exception of Upstart. That's just the one stock that can't stop, won't start, won't stop. Never mind. So let's see. Crypto. What do we got? So getting an update here on crypto pricing. We are sitting at, where's ADA? ADA sitting at 240. Bitcoin 46.2. Ethereum sitting yesterday. Bloomberg, we talked about this in the video yesterday. Bloomberg was talking about how there was a good shot that Bitcoin was going to test 44 or 43.9 again. It got to 44.4 overnight. It's an interesting dip here. We're getting a little bit of another dip here on the 5-minute chart within the channel, though. So these within the channel movements, usually they're not really worth paying attention to. It's generally these breakouts that are worth paying attention to. But this within the channel, and you can't make this stuff up. I mean, it's just like, y'all know I have not drawn another Bitcoin line for months here. But just with some even basic TA skills, you could channel this stuff. It's incredible. If you need help channeling this stuff, well, you could either call a magician who can help you channel some stuff, or you could check out the amazing programs linked down below on Building Your Wealth, including Stocks and Psychology of Money, where we talk about technical analysis, fundamental analysis, and of course, I send all of my buy-sell trade alerts anytime I buy or sell anything. Not meant to be copied, but it's just more of a notification of what I'm looking at, when I'm buying, selling, and they come at all hours of the day. So that way it works for crypto, after hours, pre-market, you name it. All right. Let's see what we got. So, okay. Poshmark, Tesla, GameStop, Affirm. Yeah. I'm curious to watch what happens with Tesla here. We should just pre-chart this thing. Although the last time I did that, it went to 777. See, like I did that over here, and it ran up to what? Yeah, 780 is what it ran to in April, and unfortunately had a little bit of a slip and slide since then. Oh well. All right, 10 minutes to market open. Let's see. Oh, yikes, Shelly! It's 108 where you are today. That's not so good. Yeah. All right. So let's go look at some news. How about that? Let's check out the news. Bloomberg. Wall Street stocks. Look at this. Wall Street braces for stumble in U.S. stocks on relentless tear. You ever wonder sometimes if it's tear or tear? No, I mean, like, what if it is like a relentless tear, like somebody said, you know? Just saying. All right. So, yeah, let's take a look at this. And then somebody says Bloomberg's talking about uranium. You mean like the ore? I've bought some uranium ore before. In fact, if you look up uranium, if you go on YouTube and type in another tab or whatever, type in Meet Kevin radioactive Tesla, you'll see all the radioactivity. It's worth watching. Anyway, okay. So let's look at this first. This Wall Street investment banks turn sour on U.S. equity outlook. That sounds juicy. Let me sign in really quick so we get rid of this stupid yellow banner because it signs me out like every other day. Can I pay more for you not to sign me out or make me do the stupid select all the traffic lights? Like, that should be an option. Pay an extra $1 a month and don't have to re-sign in all the time. Yeah. All right, so here we go, folks. Let's take a look at why Bloomberg is suggesting that investment banks turn sour on U.S. equity outlook. What is this? We're expecting a September-October rally, not sourness. And what is it that the investment banks know that we don't know? What do the suits know? How dare the suits suggest anything, Nick? No, never mind. So warnings are getting louder that the relentless run-up in American equity prices is set to falter. Strategists at Goldman Sachs, Morgan Stanley, Citigroup issued fresh missives on potential negative shocks to upend the streak of gains, including the spread of the Delta strain. Have we not priced that in yet? Like, why do I feel like Delta is somewhat already priced in? But okay. A flagging global recovery, growth recovery, or moves by central banks to exit stimulus programs all pose high risk. I mean, personally, I don't really see Delta as such horribly high risk for the stock market to where all of a sudden we're going to have all this extra fear in the market. I do agree that growth, consumer expectations, consumer spending, consumer travel, these things are slowing down. We know these things are slowing down. High frequency data is slowing down. TSA traffic for traveling is slowing down. This also don't make sense. It's after the summer. You do have a little bit of a mixture of Delta plus seasonal slowdowns. So, it makes sense. We're kind of also always expected a sort of frugal decade. And it's worth noting that if you go over here to like an Amazon, take a look at Amazon on the day chart. Amazon on the day chart has literally been channeled since July of last year. Like July to July, Amazon did virtually nothing, which is kind of crazy to think about. That you almost had, it was about 11 and a half months of nothingness for Amazon, which is insane because if you had stock like call options in Amazon, you would have just bled because your IV, implied volatility, would have gone down over time since the pandemic, which makes sense, less fear in the market. So your options pricing would have collapsed. Meanwhile, as you're trading sideways, the equity in your options position evaporates. It's crazy. We've had now two recent breakouts here. This year's, maybe you could call it the early third. But anyway, we've had a larger breakout here over this, what do we got here? This 3410 line. And we're finally breaking out again, which is a little bit of a sign that people are looking for safe growth. So there could be some truth to this here, where investment banks are a little bit more concerned about the market, so they're staying away from SPACs. They're staying away from the higher risk, the Cathie Wood style funds, and instead they're getting into the Apple and the Amazons again. Look at this. This is Apple, also somewhat traded sideways for almost 9 months of trading sideways, and recently you've had a sick breakout here. Let's do this as well. This is another gauge for you to determine are banks suggesting that that essentially, it's time to be careful of higher valuation stocks. And the easy thing to do is go onto Ortex or whatever, find the short interest data for the one thing that you could short. If you wanted to short one thing and short a bunch of high growth stocks, all you have to do is go to RK. Cathie Wood's RK will literally give you a basket of really high growth, high PE stocks that you could short. And when you look at the history of the shorts, which I'm going to pull up right here, you can kind of get a little bit of appetite from these investment banks. So let me remove myself here for a moment. Take a look at this. So for the last 30 days, as the market's somewhat been recovering, shorts have stayed stable on Cathie's RK fund, which jump on over here into the stock market, type in RK. On the day chart here, last 30 days, we're sitting, let's see, 30 days. Here are the last 2 months. Mostly sideways trading here. You've seen a lot of pain really in February. In May, you had a lot of pain and really just trading sideways over here. And despite trading sideways, you've got investment banks loaded up here on shorts. 11.24% for an ETF is pretty high. This means they're paying interest to short Cathie Wood with it trading sideways. Right? So it's not like they're printing tendies right now. They're just trading sideways. Anyway, let's go back over here. High valuations have increased market fragility. This is also true. Yeah, like where are you going to have more risk, in Apple stock or Google stock, or in I don't know, something higher priced? Like, look, here's Google, right? Where are you going to have more risk, in Google or in Tesla? Worth noting some of these things. So then we've got, let's hop on over to the article here, finish this one out. If there is a new negative development, it could generate growth stocks that lead to rapid de-risking. They're now warning of rapid de-risking. It's not so good. Positioning has become ultra bullish, with longs on the S&P 500 outnumbering shorts by nearly 10 to 1. Half of those bets are likely to face losses on a drop in the index in as little as 2.2%. In other words, there are a bunch of option contracts out on the S&P 500 that are so bullish that even a small correction could be amplified by a liquidation, which is kind of like what we saw happen with Bitcoin yesterday. Watch my Bitcoin video if you haven't seen it yet. Morgan Stanley slashed U.S. equities to underweight and global stocks to equal weight on Tuesday, citing outside risk to growth through October. What is it with all of a sudden the institutions bagging on September and October? And then they look at the historical, hey, well, often we get a sell-off in September. While no one is predicting a sharp sell-off, the summer stock binge has left investors overextended and vulnerable to any hint of bad news. We're going to have a period where data is going to be weak in September, and a time when you have a heightened risk of the Delta variant and school opening. Retail investors are seen as a key force behind gains. They plowed $30 billion into equities and ETFs in July and August in the 2-month period, the most in a 2-month period ever. That's a lot of money going into the market. Retail investors have been buying stocks and equity funds at such a steady and strong pace that make an equity correction look rather unlikely. JP Morgan Global Strategist says, whether the Fed policy changes, retail investors' attitudes remains to be seen. So technicals also point to a downturn, with momentum and volatility suggesting institutional sentiment is overheated, according to analysis by Bloomberg Intelligence. Key point here is there's very little buffer left if you get a large negative surprise. So in other words, reduce your margin and be prepared. I personally think when we get a delay to this taper, we're going to be looking pretty good. But that's an interesting suggestion from Wall Street. Let's take a look at the bell.
The opening bell and the CNBC real-time exchange at the big board today. It's space technology company Redwire celebrating its listing via SPAC at the NASDAQ biotech Omega Therapeutics. One thing we haven't touched on yet was what happened to Bitcoin yesterday and crypto in general. On some of the headlines about this rollout in El Salvador. You got the president tweeting in the middle of the day about buying the dip, sort of a new chapter in how we monitor crypto.
What? I mean, it's kind of like,
the El Salvador yesterday.
Let's just say that I think that there is going to be broader acceptance. Starbucks, there's a lot of recognition there in the end.
All right, let's go ahead and hop on and look at the stick specifically here. So, yeah, look, let me just finish my thought there really quickly. So, look, my take on this madness about is the market potentially going to rotate down, or we overextended? I think the market's going to remain tentative, but I do think a surprise to the downside on CPI and a delay to the taper because of a combination of CPI to the downside, jobs coming in miserably, and 10-year treasuries rising a little bit as the appetite for buying treasuries wanes, as the market is slowing a little bit. All, in my opinion, suggests that the Fed is likely to not taper until the beginning of November, if at all this year, depending on how Delta, ends up continuing or progressing. And so my expectation is, yeah, look, could there potentially be, a drop in September, October? Maybe. But in my opinion, it'd be a nice buy the dip opportunity. I'm pretty optimistic about the market, maybe too optimistic. So I always like to know where where my risks are. So definitely something I want to pay attention to. But I really believe those CPI numbers are going to be heading towards the downside here, September, October, November. The reason I say November is because you don't actually get September inflation data until October. You don't get October's data until November. So we kind of have this September to November-ish time frame. But yeah, certainly staying away from debt, and as much as possible, staying away from call options. I do like, though, doing call options in the short term, just because A, they're fun, and B, sometimes right before a catalyst event or something, you can make a lot of money or you can lose a lot of money. I prefer the make money part. But anyway, let's go ahead and look and see how stocks have opened up. Yeah. Okay, let's take a peek here. Okay. Let's get out of the pre-market here. So look at that, support.com moving again. Oh, sorry. Duh. Here we go. Support.com moving here, 9.95% to the upside. Let's see. Sorry, one sec to test. Okay. SunPower. Ooh, Enphase up 3%. No. No. I don't want you to be up 3%. Stop it. Stop it, Enphase. Go down, please. Coinbase, we'll have to talk about Coinbase, but yeah, Coinbase dropping here a little bit on some SEC drama. So Coinbase sitting down 3 point something percent here. Okay, give me, folks, 1 second here. I might have to do a very quick test with Fox, and that I'm just gonna stay live. So I'm gonna make a little, doing a quick connection test with Fox News. So I'll put a little note up when they call. So there's a chance I might have to disappear. Well, I'm not gonna disappear. You're just gonna hear me not talk about stocks for about 60 seconds. Whenever they actually call. But anyway, okay, Neo. Yeah, Neo falling on that offering. Thank you for whoever mentioned that, by the way. Metamaterials down, Tattooed Chef down, getting back down to that rubber band to 20. It's not a surprise to see that rubber band to 20. You've got Cardano dropping now 239, Doge just under 25. Okay, yep, here's that call. Why, FaceTime. Sorry, give me 1 second, folks. There we go. All right. Hey, how you doing? Hey, what's up, man? How's this look? Hold on, let me go to this camera. There we go. Nice. And I'll change that the little monkey NFT screensaver there. In fact, I'll do that right now really quick. Hold on. Actually, I'll change it. I'll change it in a few minutes, but I'll have it changed. Oh, yeah, I should be able to do that. Let's see here. I think that's that button. Okay. Yeah, something like that. Is that good? Oh, yep. Okay, hold on. So, how's that? More. Okay, here we go. Okay. Unless you want me to change the monkey really quick for your screen grab. I'll do it really quick. Oh, if you want it, that's fine. Perfect. I think it's 7:30, right? Okay. Okay. Perfect. No. Oh, maybe I just don't know the acronym, but I've done that before. Oh, great. Oh, perfect. Oh, that okay. I hate that. So that's good. Thank you. Perfect. Thanks, man. All right. Nope. I'll see you guys in about 43 minutes. All right. Thanks, y'all. Nice. You too. Bye. Okay. Thank you for hanging out for that. Yeah. So, all right. So where were we? Where were we before we got interrupted? we were looking at the sticks. All right. So thank you for bearing with that. All right. I don't know why they always want me to sit back all the way, like way over there. It just messes everything up. Not really. It's fine. All right. So, oh, look, AMC actually went green this morning here. Let's take a peek here at this. Oh, look at that volume that just came into AMC. Oh, this is like good, but then also makes me a little bit nervous because I have a $55 covered call. So like this is great because this means my portfolio is positive. But I think if I $55, see if I got called out, I'd have to like rebuy right away. But I don't think I'm gonna get called out. Let me see. I mean, for the sake, oh, Tesla just dropped a little bit. Now it's at 0.70 to the upside. It's at 758. So a little bit of volatility here on Tesla. But I'm just gonna look really quick. So at AMC, I have well, the good news is, see, I have two options contracts here. So I have one option contract that is a covered call for December 21st at $55. That gave me a $26,000 credit. So that basically is wow, $12 and no, sorry, I paid $11.70 for the thing. And that would basically be like selling the stock for like $67 with that credit if I held that option through December 17th, which is fine as long as I don't get pre-exercised, which is you can get pre-exercised, but it's really stupid for somebody to exercise an option before because they give up all their extrinsic value. But anyway, then I have a sold put on AMC. So a sold put means that if AMC sells under $40 on January 23rd, January 20th, 2023, I have to buy the shares. And I have 20 of those contracts, and I got paid $41,300 for that, which is insane because that's like 51% or 52% of a credit versus the $80,000 of collateral that essentially I put up. It's just like crazy, absolutely crazy. So kind of interesting. And so we're really getting close with some of these numbers here to 55 for my sold put being honestly, if we traded at like 50 to 54, it'd be golden on both options. I'd be golden on the sold put and I'd be golden on the covered call and I'd be golden on the shares. It would just be like triple golden. Of course, another option is it could just run to the moon, right? And that's a huge, and that short squeeze, that the big squeeze everybody's been waiting for could finally happen. Hey, look at that. Hippo's moving. Hey. As I said yesterday, crypto sell-off was to cover AMC shorts. I don't know about that. I think that's an interesting correlation. I don't know, but that is interesting. Look at that. So we got Hippo moving 2.81%. We got Affirm moving 2.4%. We got Canadian Solar moving 1.95%. This Canadian Solar has been sneaking up to us into this channel we have. Yeah, look at that sneak up here into this channel. Look at it. It's like a little baby puppy popping its head here into the channel. Oh, it's so cute. Oh, Canadian Solar. Peloton's actually positive today. Peloton up about 1.9% here. Looking at the downside, Clover really got spanked today. It's Clover and the Chinese autos. Look at that. Li Auto, NIO, XPeng, down, 3 to 4%. Palantir falls 3%. You've got Tattooed Chef sitting 2073. Metamaterials down a little bit. Coinbase only down about 2.7%. Canoe. Okay. Let's see here. It's worth just giving another little strategic update. So let me mention this because I wanted to add this too. So hold on, let me do this. There we go. something that I really think and believe for this market is it's a very good idea to still hold RCC up to opportunities. So remember, RCC is real estate, cash, crypto. The reason I've been mentioning RCC, real estate, cash, crypto, is not because I want to sit in these forever. It's because I want to use those as places to park money and then move into stock opportunities. It's worth mentioning that yesterday I saw somebody in the comments write, Kevin, the riskiest asset is really cash, because over the last year, you've lost 5.5% of the purchasing power of your cash. And I actually don't believe that. See, even though we've had CPI come in at 5.5% or whatever, remember where the CPI inflation is happening. Travel, lodging, used cars, women's dresses. I kid you not, that's actually a category. And in some cases, you're starting to see some rent inflation, but just starting to see that, not really seeing services come up yet, right? So you have this really uneven measure of inflation to where, yeah, some things have gotten more expensive, some foods have gotten more expensive, but your entire cash has not, in my opinion, lost that much to inflation. So I like, though, having cash and some crypto and real estate, because to me, those are my piggy banks. So that way, if we do end up getting a September, October correction instead of a rally, or maybe a correction and then a rally, I have cash that I can throw into the market. And I'm willing to dump crypto to buy a good opportunity in the stock market. I'm also willing to break the piggy bank on a property, let's say, take out, like refinance the property or whatever, and buy an opportunity. Obviously, that takes a little bit more time. But the reason I say that is I just want to stay away from stock margin. If I'm away from margin, but I take out debt that tenants pay for, and you're still cash flow positive, well, hey, then that's a great opportunity. So that's why RCC is something that's like, because sometimes I see people in the comments are like, oh, Kevin, you said real estate, cash, crypto, and now you're throwing money onto Hippo insurance. It's like, well, yeah, I see an opportunity there. So like, am I just supposed to go, nope, I'm not looking at any opportunities. I said RCC. Like, sometimes I don't understand. I feel like people are like 10% paying attention, but those are fortunately just very few, little commentaries. Don't forget the third C, Kevin's courses. Well, that's nice of you. RCCC. Well, thanks for that. All right. So, all right. Which that does remind me, because I do have the Fox interview, which is a Fox National interview today, which is kind of cool. We will be pushing the course member live stream back a tiny little bit to just right behind that Fox interview. So we'll see how that goes. Unless I take the kids to school, then it'll be right after that. But we'll figure. But then we'll have more time too. So that'll be fair. Look at that. Hippo still moving here. 3.3% now. Nice. Let's go, Hippo. Good. Look, 490, 550, undervalued stock. Even 590. It's like, look, this is in my opinion, even if this thing ran to like 750 and traded sideways, to me, I'd look at that and go, yeah, that's reasonable. Like, that's fair. But anyway, so what do we got over here? Upstart. This one just blows my mind that it's going to $300. That's all I can say is I'm mind blown. Affirm just dropped a little bit, still up, still green in that 1.5% range. Spirit Airlines here. Delt Enphase. Oh, good. Enphase falling again. Let's go to the ground, please. Oh, that probably means Tesla's falling too. Tesla's falling nicely here intraday. Enphase, though, gosh, I would just love like a 2-week correction in the market. The Bloomberg uranium article. Okay, all right. Hold on a sec. I will pull that up. Give me 1 sec. Okay. Kevin had too much coffee again on an empty stomach this morning, and so now I've got a tummy ache. I hate that. So like, I even had, well, it wasn't an empty stomach either, because I've learned my lesson, and now I'll have like a piece of toast before. But apparently it's not enough for how much coffee I just dumped on it. Oh well. The show goes on. We will not be stopped. Wait, I just signed in. I literally just signed in on this browser. How could you literally put me through the sign-in garbage again? It's literally putting me through it again. It's fine. I hate these things. Make sure you're not a robot. All right, here we go. Uranium surges to 6-year high as fund buys up physical supply. Let's talk about uranium, which I've also made reference to before, that I bought some uranium ore and did an April Fool's video called The Radioactive Tesla. It's worth watching. It's kind of ridiculous if you type it into YouTube. Meet Kevin, Radioactive Tesla. But anyway, let's take a look at what's going on with uranium. Strong fundamentals also lifting uranium futures higher. Uranium, the commodity used to fuel nuclear power plants, has surged to the highest level since 2015, due in part to a single fund aggressively cornering the physical market. The investment firm Sprott earlier this year launched its Physical Uranium Trust and recently commented on Twitter about how much uranium it's been buying, aiding to the commodity's recent bull run. Sprott has amassed over 24 million pounds of uranium, sometimes buying more than 500,000 pounds in a single day. Where do you put all of this? That's what I want to know. Where do you put all of this uranium? That's insane. And they're posting Wolf of Wall Street pictures. Their fund, Sprott Physical Uranium Trust, reaches $1 billion in assets today. Oh my goodness. Holy moly, $1 billion in uranium. For comparison, total spot in 2020 was 92.2 million pounds. Oh wow, that's a lot apparently available. But wait a minute. Wait, they have 24 million? Oh my gosh, look at that. They have more than a fourth of the entire market. Holy moly. The buying is in addition to already bullish fundamentals. Why? For what? Uranium prices must rise further to spur the restart of production to meet uncovered utility demand after 2023. What the heck does that mean? Must rise further to spur the restart of production to meet uncovered utility. Okay, that's very confusing. Okay, so in other words, oh, look at this. Oh, so they're talking about how basically miners are not mining until the price goes up. This is literally like OPEC. It's just like shady market manipulation where it's like, yeah, let's just not sell barrels of oil and let's just hide them until the price goes up so we could be scummy and get a little bit more money for what we want to sell. To me, this sounds like this honestly is what the SEC should be looking into. Really? You're going to corner 28% of the uranium market and then oh my gosh, we're shocked, the price is going up, wow, we must be really good investment managers. No, you're buying up the float, which by float I mean rocks which don't float. But anyway, the buying is in addition to already bullish fundamentals. Here's the uranium futures chart. Energy costs are rising around the world, and demand from the COVID-19 lockdowns collides with supply constraints. Power plant fuels, including natural gas and coal, are surging to new heights, making it more expensive to operate these factories and keep the lights on, compounding the inflationary pressure already resulting from supply chain shortages. Uranium futures surged 15% last week, making it the best weekly gain in more than a decade before the Fukushima nuclear disaster. They're now trading at the highest level in 6 years, show little sign of letting up. Sprott noted in its July presentation that it was already slated to be the strongest non-utility buyer year over year. Rally has benefited Cameco Corp, one of the largest suppliers of uranium. That's interesting. Okay, so in other words, some company is cornering the market with their Physical Uranium Trust, which is a ticker, I guess, called U.U. Is that actually a ticker? Trust. Oh yeah, there it is. Okay, Sprott Physical Uranium Trust. Is this like a chart we could look up here? Yeah, let's see. Management fee 0.35%. That's actually not horrible for something like uranium trust. It just sounds I don't know. That does surprise me. Okay, let's see. I would have expected that to be a little higher. Can I actually get this? Sprott Physical Silver Trust. Oh, they played in this physical in the silver game too. Uranium. See, we can't even get it on Weeble. That's interesting. Yeah, you should be able to see a chart. Let me see if I could get a chart just on Bloomberg. They do have many trusts, yes, and that's okay. U.U. Let's see if we could get a line chart. Sprott Uranium. Here we go. Sprott Uranium Trust. Yeah, no, a line chart. Here we go. SRUUF, got it. Take a look here. So this is the 1 year of the Sprott, and you go out here to, well, I guess it actually it hasn't existed since basically July 22nd. So they just came out with it. Can I put this on Weeble? Ruth. Ruth. Ah, okay, there we go. There we go. Okay. Really? Look at this recent sort of momentum surge almost. See, I don't trust this. Let me go to the day here. Yeah. I don't trust a single company going in buying up everything and then going, look at how well we're doing. I mean, maybe it's something you can play, but if you go to, just to compare, let's look at silver. Let's see how they screwed that one up. Let's see. So if I go to the day chart on silver, or let me go to the week chart, go out a little bit more. So here's silver through a pandemic crash right here, run up. I mean, that's not bad. So you had that sort of crazy run up over here in silver, and you've had the sideways trade here with a recent kind of bleed out. I almost wonder if people are taking their money here and throwing it into the uranium one. I mean, I guess if you wanted to trade rocks without actually having to pick up rocks, that'd be the way to do it. But I don't know. Is it something that I'd be jumping up and down about? Not really. Yeah, sorry. I'm sure there are other companies, but look, what do I know? About uranium ore other than my radioactive video. I mean, that was cool. Especially the Dropkick Murphys tune at the end where we reveal it's the April Fools. Have you all seen? Okay, at the very least, you have to see the suit I was wearing. But I encourage you to watch it, and then we'll get back to the sticks here. Meet Kevin, radioactive Tesla. Yeah, look at this. Okay. Oh, get an ad. What is this garbage? All right, here we go. You ready for this? It's ridiculous. All right. So here we go. And wait for it. That's where is my suit? That's my Geiger counter. And oh, here we go. See? Right here. Look at that. It even says meet Kevin. You gotta watch it. It's great. Sorry. I don't know why I had to do that. All right. Steve T says, Kevin, they aren't even listed on the NYSE yet. Once that is listed, big money to buy uranium. Yeah, I mean, maybe. I personally don't care about uplisting. I mean, I get it. It's easier for other people to buy in, and it's in a trust. I get it, but I don't really care. It's not my stock. Look, I hope you make lots of money in it. I don't have a competitive advantage in rocks. I don't. I think I can understand other companies better than I can understand collecting rocks. I'm just not a rock collector. All right, what's going on over here? So Hippo's up 3.8. Hey, Hippo's now beating Upstart. Whoop whoop. Well, yeah, it's kind of weird on Friday. Going, yeah. By the way, I'm putting $500,000 into Hippo. So we put out a stocks and psychology of money alert when I bought it. Well, obviously, I always put out the alerts when I buy or sell. But no, this is good. I mean, I hope it keeps going. I'm really looking for 7, 8, 9. I mean, who knows? Maybe it could still even run to $10. I think it'd be overstretched then, but could always momentum up. Walt Disney, 1.43%. Okay, Dave & Buster's just lost a little bit. They were up about 2.5%, slowed down a bit. Matterport's coming back about 1/3%. They had a pretty rough day yesterday. Clover's really getting hurt here. Arrival is under $10 now. Ugh. Arrival's plummeted here. Neo's down. Clover, DD, HUD 8. HUD 8 at 955. Ooh, that's a nice little rotation on the downside. In fact, I think that's what I paid for it. I think yesterday I bought it for like 952 or 3 or something like that. It was right around where it is now. So flat on that. Oh, Coinbase just rotated down a little bit. Is crypto falling more then, or what's going on here? Let's see. Cardano's at 239. A lot of Sparklines going down here. 33.98 on Ethereum, and Bitcoin sitting at 46.2. It's still sitting at that 46.2 number. Apple rotating down. Twitter, Facebook. Oh, it's almost like FANG's down today. Where's Google? Google's the one that you just can't touch, though. Goog. Here we go. Yeah, Google's red too by about 0.18%. So that does help understand why the indices are slightly red. Let's see here. Yeah. Oh, look, the Dow actually went positive, but the Nasdaq Technology is down 0.35. That worsened, and the Russell worsened, leading the VIX to bump up a little bit. TSM. Let's see what we got over here. Oh yeah, sitting in its channel. Okay, yeah, a little rotation over here as well. What intraday? Okay, now let's see what else we have. Uranium. Okay, let's go to Bloomberg. Yellen says debt limit measures to be exhausted in October. I mean, this is old news. They were talking about this. Well, the Treasury Department has a little notice on their website that they're going to run out of money in October or November. So unless Yellen has now moved this up to, oh no, it's definitely going to be October. But don't worry. We have Congress. Congress is going to take care of us, right? Aluminum hits 13-year high as supply woes build. Demand booms. Wall Street promises ESG credibility for just 0.01%. Okay. Bitcoin and meme stock traders are tired of buying the dip. What? How could you be tired of buying the dip? What kind of article is this? Have they not seen the buy the dip video? Cryptocurrency, equity, and SPAC fans use the phrase to rally support on social media when their investments sink. Does it actually work? Okay. When Bitcoin plunged on Tuesday, El Salvador's president tweeted a version of buy the dip. In the past year, the 3 words have ricocheted across social media anytime meme asset slumps. AMC and free fall, buy the dip. Crypto takes a slide, buy the dip. Celebrity SPAC, buy the dip. Okay, get it. Not a new concept. Blah, blah, blah. Requires a level of faith in an asset, whatever it is. Markets have gone up for so long now. People have made so much money in retail, don't want to be left out of the momentum. There's a sense of community with Twitter and social media where we can inform each other. We've literally seen that drive up stock prices in certain cases. El Salvador buys the dip. Okay, are they going to actually add any value to us here? 29-year-old investor from Dallas says she's a gambler at heart who has made several thousand dollars in the crypto space. But after seeing the price of Bitcoin, Ethereum, Doge, and others slump, she now vows to hodl for dear life. Right. All right. Let's see here. Hodl for dear life, which is interesting because that's kind of like hold on for dear life. For dear life. Like what? It's kind of like the ATM machine or automated teller machine, right? Yeah. No. Don't expect to hear opinions on social media often. Okay. To me, it just sounds like they're ranting about buying the dip. I don't understand why. If buying the dip serves as a reminder for investors to put cash in the market on a regular basis, that could help them in the long run, since the stock market reliably trends higher over time. The key is not to deploy too much money at once. and to be cognizant that certain drops can continue longer than expected. I think that's fair. I think that's a good point. For example, of how buying the dip can boost or burden returns, look at Cathie Wood's ARK. Ouch. Now they're making fun of Cathie. I feel like that article was a lot of complaining. I know nothing about indie. I'm sorry, Fred. I literally don't even know what it is. Yeah, that's boring. Now, because of that crap, we're going to go to like Wall Street Journal. Bitcoin steadies after flash crash. How TikTok serves up sex and drug videos to minors. Okay. Wow. That's top of front Wall Street Journal. Elizabeth Holmes trial to begin. It's old news. Old news. Delta wave peaks in some states. Others brace for what's next. Oh, yeah. How's COVID doing this morning? COVID cases. This should be much higher than yesterday, because yesterday was the result of the holiday info the day before. All right. So let's go to show all and last 30 days. Yep. There you go. 301,000 cases. This was essentially our Monday chart here, because we had a 3-day weekend. So you had a 3-day low right here of tests coming in. All right. What else? Oh, yeah, look at that. Hut 8 mining's at 939. DD, Arrival, Neo, Xpeng, EXPI. Wow, EXPI down 5%. DQ's down a bit. Archimoto, Build-A-Bear. What's this pain all of a sudden? Honest Company, Coinbase, Cardano. Let's see. What else do we have? Robinhood, Mind Medicine, SoFi down slightly. The SPAC's going down a little bit again. A lot of these stocks. Look at this. Look at these spark lines here. Down, 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 down. All of this right here, falling in the day. All of this falling in the day. All of this falling in the day. Everything is going to the toilet. Down, 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 down. Holy moly. What's going up? Hippo. Hungry, hungry hippo. Virgin Galactic's bouncing off a little bit. Beyond Meat, 115. Walt Disney, DoorDash, Support. These guys are doing okay. Let's go, Hippo. Piton, 0.76. Amazon. Tesla's up at the 0.25% here. And Enphase almost flat on the day. Let's listen into here. What's CNB? What are the suits saying here?
It's not just U.S. policy on the fiscal or monetary side either. I mean, it's all the goings on in China that are having ripple effects as well. You have some commentary coming out of officials at the ECB ahead of that event tomorrow too. That seemed to be jolting investors a little bit here, at least in the near term. I guess looking around the globe and then taking that into account versus some of the valuations we're seeing in markets here. I mean, how would you assess the risks?
Well, it seems pretty clear to me that we have a deceleration in growth in China, as well as the other emerging markets, and that the stronger countries are the developed, particularly the U.S. So I think we'll be somewhat insulated from that. And keep in mind that we actually have interest rates that are among the highest of the developed world countries. So again, it makes it much harder to talk about raising rates, even though the employment, the economy here looks pretty good. They're really kind of in a bind about what they can do at this point.
Hey, Joe, we seem to have had a deceleration a bit in the economy as a result of the spread of the Delta variant. But what if we actually get that under control pretty soon? Thankfully, I think we hit a new number, a new high since at least July in vaccinations yesterday. A number of states seem to be peaking. How do you view that in terms of your expectations for the economy? Should things actually turn better in terms of dealing with the virus?
Yes, David. I mean, essentially, it's the argument that we made a year ago in the White House, which is reopening does create, if you're allowed to reopen safely, that does create additive aggregate supply. So yes, if the virus is under control and/or businesses become more confident in taking risks, and household risks, meaning investments, things of that sort, and households have childcare because the schools are open. Yes, this all becomes very positive for the economy, and that increased supply will help meet demand, and it will obviate some of the significant price pressures right now, David, that I see in the economy. And the risk is it gets worse going forward. So I would probably worry more about inflation at this point than anything else.
Joe, I mean, as someone who has stood at the intersection of economic growth and policy, are the markets taking a close enough look or pricing in the possibility of higher taxes into next year?
No, I don't think so. I would say that, certainly on the small business side, when you look at that survey, there certainly is some concern about what's coming down the pike. Right now, markets seem to really just love the fact that you've got extraordinarily easy monetary policy with tremendous amounts of liquidity. And there is a risk that if we go forward and we take, for example, capital gains rates up above marginal rates, there will be a meaningful pullback. But that does not seem to be right now on the market's radar whatsoever.
Guys, we'll keep it a bit short this morning. Plenty to juggle. But Margie, Joe, good to see you both. Thanks so much.
All right, I'm going to jump on over to this here. U.S. equities retreated, extending declines from last week's all-time highs as investors reassessed valuations in light of global economic risks, including the pandemic. S&P falling for a third day. Wednesday's drop came as money managers from Morgan Stanley and Citigroup have turned cautious on equities. Many investors have just begun this. It's interesting. Hold on. Let's do this. All right. So this here is an update that also just came in. Wednesday's drop came as money managers from Morgan Stanley to Citigroup have turned cautious on U.S. equities. Many investors have begun to see relative U.S. valuations as excessive, even as growth elsewhere suffers from renewed lockdowns and travel curbs. So growth in obviously like hotels and travel suffering, but at the same time, now investors may be getting nervous about valuations of other stocks. I'm just a little bit surprised, especially with CPI coming up here, that all of a sudden now it's September and people are like, time to be nervous. It's interesting. They doubt the world is ready for an eventual tapering of the central bank stimulus. I agree with that. I don't think we're ready for the tapering at all. Momentum definitely seems to be slowing as far as the recovery is concerned. Before, we've been hearing the Fed would tighten monetary policy, and that's been unnerving the market. Now it's softer data and rising COVID cases. It's interesting. I mean, the market could just freak out over, wait a minute, like forget about the fact that we might taper. The real data is showing the economy is slowing down. Well, it's interesting. And then we got all those negotiations with the debt limit coming up. Are we going to have the $3.5 trillion stimulus or not? A lot of those negotiations start, a little bit next week, the 13th, 14th, and 15th. But the big part of the negotiations is going to occur between the 20th and the end of the month. Worth noting. So, yikes. Okay. This is a good UK government stated yesterday the UK economy is rebounding faster than all the simulations suggested, and as a result, increased taxes by 1.25%. Wow, they could do that? Oh my gosh, that would not happen in America. Yeah, that's interesting. Maybe they have some kind of inflation-adjusted tax or something. That's very interesting. Okay, so yeah, let's see here. Hippo's green today. I like Hippo. Let's see, Neo. But why is everything rotating down? I don't get it. Look at this. I mean, the crypto fall, I understand. We saw the liquidations, which I think is great, very healthy. I mean, it sucks for the people who were in debt, but this is why we say don't take out debt on crypto. Cardano now at 236. Macy's, Workhorse, Zom, Palantir, Canoe. These guys all down a good 3% today. Rival, Hut 8, Hyliion, Proterra, Tattooed Chef. Okay. Robinhood Square, AMC. Whoa! AMC turned red? What? Yeah. What is this? That's interesting. Ay. Ugh. Wow. Okay. Shift went down. They were at $8 this morning. Here's ChargePoint at 22. They ran after earnings. Ubiquity is also going down. Everything's going red today. Robinhood's almost under $40. Everything's just getting smoked right now. What a weird day. Wow. Zoom is back under 300. Affirm turned red. Affirm was up like 2% this morning. I wonder if we could sell puts on anything. That's interesting. Like, I'm going to look at sell puts on Hippo. Let's see. If I go to September 17th, which is just like 9 days from now, sell puts. I'm just curious. 25 cents. That's not so good. Here it'd be sorry, put. There we go. There we go. Okay. That's better. There. That's like $6. 40 cents here. That's like buying it for $5.60. That's like buying it for $6. So that's $5.6. Okay, let me go to October. Sell put on Hippo, 65 cents. That brings you down to about $5.35, which is 0.65 divided by 6, a little more than 10%. Yeah, it's about 11% in terms of a credit for what, 37 days or something like that. Very interesting. Okay. So, and then if you go out to here at $6, so you buy it basically if it's under $6. Well, if you go to like, just forget, oh wow, you go to 5, it's basically worthless. That'd be like buying it for $4.90. To October, 30 cents. Yeah, that'd be like buying it for $4.70. But you're tied up for a while for not much. No, I don't think there's really a sell put play here. Unless you wanted to go out more time. That would be again a $5.60. No, I don't think there's a sell put on a day like this. I mean, it's up. There's probably more of a sell put opportunity, honestly, over here at something like Hut 8. You know, you go into here, Hut 8, $9. Or like, look at Neo, right? Let's see here. Okay, so you go to Neo, or sorry, Hut 8, 62. Well, I mean, we're basically, yeah, okay. So let's say you sold a put, you get 62 cents. That's for September. You go out to October, you get, well, that's not bad. That's like what, 18% for 38 days? 1.51 divided by 9. 17%. That's interesting. If you wanted to own this. Neo down. What's another one? EXP. What's something that's really beaten up? Like ChargePoint. Even in price, right? Let's do that. Cheap CHPT. And go to, I don't know. All right. Go to the 17th on ChargePoint. Let's take a peek over here. So if you did a sell put of $20, let's say, nah, you're not gonna get anything. What about 20? Where are we right now? Are we at like $22 right now? Pretty sure we're at $20. ChargePoint stock. Yeah, right. Yeah, we're at $22. Okay, so you go to $22 right here at the money on ChargePoint. You would get, it's barely 5%. That's no fun. You go out to October 15th. That's better, but that's still not even 10%. No, the sell puts aren't that juicy right now. Where'd all the juice in the market go? Where'd it go? Support Upstart Hippo. These guys are greens today. Tesla's green. I wonder, I mean, Tesla, how are the Tesla shorts doing? Let's go Tesla October 15th, sell some puts. Sell put 5. That's like 5% for October. Yeah. No, there's not really a good sell put right now, in my opinion. Uranium. Can you do that? Can you sell puts on the uranium? Anyway. Yeah, this is an interesting market. What about just SPY? What if people are buying puts on SPY? Let's see. SPY for, let's go to October 15. October 15, 37 days. Let's go right over here. Okay, so you'd get $8.42 on 452. That's nothing. That's like 2%. That's boring. That's no fun. All right. Interesting. Build-A-Bear, Hut 8. What a weird little transition in the market here. SPY put's never worth it. Yeah, no kidding. What a weird little transition. That is so bizarre. How's crypto? Crypto. Yeah, okay. Crypto pretty much stable from where we left off. This is just a bizarro market. I think it's almost like people like woke up the last 2 days, and you have all these institutions that are like, you know, we feel a little bearish all of a sudden. It's like moody institutions is what you've got. That's what this is. Moody institutions and nothing else. It's just weenie babies. Little weenie babies. Like, oh, well, if retail was able to put so much money into the market in the last 2 months, which they said this is the largest 2 months of retail putting money into the market. If retail put so much money in and we've been missing out, well, then we're going to poo-poo their market. It's kind of like what the hedge fund weenie babies, I feel like, sound like right now. Just because all the headlines right now are institutions concerned about growth or this, that, or whatever. It's emotional. Blah. So anyway. All right. Well, this is the point where I mentioned that you should get up to $70 in free stocks. The link down below with the public app. They won't buy or sell your information, and they don't use payment for order flow. You can follow me there at Meet Kevin on the public app, but make sure you first go to metkevin.com/public to download the app. Check out the programs linked down below on building your wealth. I hate to say it, but so many people have been sending me messages going, Kevin, we'll buy your course if you don't win the election. Like, okay, that's kind of like a weird incentive. So as a result, I did push the price increase to after the election, which means then we'll have CPI data. We'll see how much the price actually has to go up, how much inflation there's been. But usually the course goes up $30 to $50 each time there's a price increase. But we pushed that back just a little bit because of that. And yeah, check that out. Link down below. You get all my buy, sell alerts and stocks and psychology of money. You get daily live streams in all of the courses. It's all sort of one joint program where we talk stocks and options and then real estate. And sometimes we talk about YouTube and so on. So anyway, thank you so much for being here, folks. We will see you in the next one.